Ladies and gentlemen, welcome to the Forbes India Pre-Budget 2022 special discussion, where once again the focus goes back to really what the government will do now. It has a whole range of issues to tackle with rising inflation, rising fiscal deficit, uh, trying to create jobs and to really understand what the government has on hand and how it's going to tackle some of these issues. We have some eminent speakers who will join us to unravel all this. To the viewers who have just joined in, welcome, and I hope that you're taking out time to be safe and following all COVID appropriate behaviors because Omicron is still with us, and we hope that it moves on quickly so that business activity can resume. For the special discussion, which is presented by IDFC First Bank, we are joined by some of the brightest minds in the capital market and the tax reform space who can throw more light on this. We have Mr. Gautam Duggad, Head of Research, Institutional Equities at Motilal Oswal Financial Services, and Mr. Sanjay Kumar, Partner at Deloitte India. Welcome, gentlemen. So you would have seen, the economic survey, just a little bit, which have been coming out now, data coming through that FY23, the forecast could be for a 8 to 8.5% growth. But statistically, if you look at 2021, 22, FY22, which went, we're looking at a scenario where the India could have grown by around 9%, 9.2%. But while this may look, very impressive, we have a dichotomy which is playing out in much of 2021. You had on one side GDP growth, as I spoke about, very impressive. But we also had issues such as, the lack of creation of jobs, the lack of income opportunities, which has resulted in uneven consumption demand. So while on one hand, you have impressive GDP growth, you have a stock markets which were very, very good. You had capital raising activity, which was at a record high. You had a stock market return, which was about 20%. The government still has these 2, 3 issues to tackle, and it doesn't have too much time on its hand. And if it needs to meet its disinvestment target, there are issues that it definitely needs to, quicken over the next 2 weeks or 3 weeks, in terms, especially to try and ensure that the LIC disinvestment goes through. So I'll bring Gautam into this first. Gautam, in view of this entire scenario, where you look at on one side GDP growth, which was impressive, but we still have a third wave which is playing out in terms of Omicron. You need jobs to be created. You need income to boost consumption demand. But you also have the issue of rising inflation, the issue of rising fiscal deficit, and the government's hands might be tied out there. So really, how is the Finance Minister Nirmala Sitharaman going to play all this up tomorrow?
Hi, good afternoon, everyone. Pleasure to be here. So you mentioned a lot of points, Salil. See, in every budget, there are always going to be some opportunities, problems, headwinds, and some challenges. So we are emerging out of COVID, hoping that this is the end of it. Let's pray for the best. At the same time, you've seen that FY22, as far as macroeconomy is concerned, and also microeconomy, has seen a sharp recovery, on a very low base. So most likely, the FY22 output on GDP will by and large match the FY20. So if you look at the pre-pandemic growth trend, there might still be some output gap, right? Employment, of course, is a very important indicator that you pointed out, and we have all seen across sectors this year. High frequency data is also pointing out to that across many sectors in India, the big has become bigger, while the unorganized small segment has lost market share across the board because of the pandemic. And of course, this is a trend which has been playing out even before the pandemic, post GST, IBC, RERA, all sorts of long term reforms, which created some short term disruption for the smaller, unorganized guys. And that got exacerbated during the COVID. Having said all of this, budget is basically a one day event nowadays. The relevance of budget, and I'm speaking more from a capital markets point of view. If you look at the last 10, 15 years, the relevance of budget has diminished significantly for capital markets over a period of time, because now policy making is a continuous event, right? You see a lot of big initiatives, reforms get announced outside of the budget. Indirect taxes, GST, etc., are settled separately in the GST council meeting. So there is very precious little that the finance minister on that particular day can unveil, right? So what I will look at, tomorrow are two or three very broad, important macroeconomic trends and policy direction. First and foremost, are we going to see some boost for short-term consumption? Because that is where there is a biggest problem. If you dawdle this with the corporate commentary of last 45, 50 days, because we are right in the middle of the third quarter corporate result season, corporates after corporates in the consumption space, more to do with the staples, low ticket item, more towards the rural economy, have been talking about problems of demand. So rural demand slowdown, as the word is. And on the contrary, you are seeing the high ticket discretionary urban facing sectors like paints, durables, adhesives, quick service restaurants, they're growing in a high double digits. So there is a clear-cut K-shaped consumption recovery which is panning out. That bottom of the pyramid is struggling and end of the pyramid is doing very well. And I think that is where some rejigging, some redistribution of spending needs to happen, because you can't have one segment continuously facing stress, because that will at some point of time have an impact on your macro numbers. So whether the finance minister can, energize that part of the market, that part of the economy, is a very important outcome for me. Second, we all got very excited last year when the government increased the capex budget significantly. If you look at the trend from FY98 till FY21-22, the announcement and execution has been very strong. There is no major dichotomy. But FY22, if you look at the first 8-month numbers on capex, we've done just about 50% of the budgeted estimates. We still have 4 months, or rather now 3 months. So I'm hoping that those numbers are achieved, because this is one segment which has been lacking. It's not done well over the last 7-8 years. If you look at the corporate India or even at an aggregate level, the capex has not been doing very well. So if that can be revived, it will obviously over a period of time have a multiple positive impact. Capex always has a multiplier effect on the economy. So I will be very keenly watching the capex allocation of the government and which areas are they increasing the allocation towards in the capex part. And third and most important, because this is going to have a huge implications for the government's ability to spend going forward, is how you're going to take care of the divestment related aspect, right? Because that is where a lot of hopes lie as far as the receipts are concerned. This year has been extremely good for the government because the tax collection has been very strong. I don't think every year you're going to get this bounty, right? So to be on the conservative side, and if you want to spend and revive the growth and also ensure that the employment situation turns around, then you have to find money to spend. And you have very limited avenues to find that money. You cannot keep raising the taxes higher, because then it will have a negative impact on other elements of the P&L. So how do you monetize your assets? Because government has come out with an extensive plan in the last 2 years. Execution, in my mind, is still leaving a lot to be desired. We obviously had Air India divestment, but that's one milestone that has been achieved. There are a lot many assets where the divestment is yet to be completed. The big ones like BPCL, LIC, of course, everybody knows. But aside of them, there are many other assets which, if the government can execute it well, it will have some sort of a breathing space on spending. Because remember, Salil, in the P&L of the government, more than 60 to 70% of the spending is non-discretionary. The likes of interest payment, defense, pension, subsidies, grants to states, a lot of those items are already prefixed. So the room to maneuver for a finance minister is very limited unless the finance minister is able to find more sources of revenue. And that is where I think whole divestment related policy comes into picture. Rest, the usual things we are all aware. There will be some tinkering here or there in some taxes, some customs duty, some allocations will be tweaked. But these are the three big things that I will be watching for: push for consumption, uh, divestment, and of course, how the overall fiscal deficit shapes up, because that will have huge implications for the net market borrowing and, of course, the bond yields, because bond yields have gone up significantly in the last 3 4 months, globally as well as in India.
Right. Gautam, great. Hold your thought on the infra spending bit of it. I'll come to that later. I'll bring in Sanjay out here. Sanjay, welcome. Same question to you in terms of reform. What do you think the government can really do right now if they need to spur, uh, you know, demand, get that growth at least back at that 8.5 level over a sustained 2 3 year basis?
Salil, thank you very much for having me here, and good afternoon to the audience. Salil, after the COVID hit us in the year 2021, we are still in the correction and consolidation stage. Uh, Government during the last year budget, which is the current year, 21-22, uh, did pay some attention to the uh, allocating some more, 26% extra or higher allocation on for the infrastructure, and that was the right thing to do. Brought 135% increase on the health and well-being, which was again the right thing because we were passing through COVID. And the results are quite all right, because if you look at the growth numbers, they have stuck around 9 to 9.2%, which is, I would say, a very good one. Having said that, the next year, the expectation will be that the such consolidation and correction continues. The capex allocation continues. There is more spending on the health from the public sources, and because if you look at the amount of health as GDP, it's still at about 1.5 or thereabout, which is very low, because the large amount of money the private people have to pay. So there will be some allocation to that. So, and then, as Gautam pointed out, there should be some stress on the consumption enhancement, because if you look at it, there have been sections of the society which the lower 20%, their income got wiped out by almost like 50%, while the overall India's income grew by about 9% or so. But that masks a number of smaller units whose income got wiped out. It will be the job of the government to pay attention to that, because that has a large bearing on how we bring the consumption to the level that we had experienced before the COVID hit us. If you recall, the consumption used to drive up to the 70% of the GDP growth. I think if that comes to fore, we would have a very stable and sustainable growth in the years to come. We have done well on the investment side. The growth has been about 11 to 12%. Exports have done well, which is another very important component. But headwinds are already coming, or are visible at least, because US Fed is likely to increase the interest rate. There are indications, and similarly it would have a ripple effect across the globe. So, government will have to find out measures by which it continues to do well on the exports, because the PLI scheme was driven on the two aspects. One was that it should be export enhancing, and the second one was that it improves the the Atmanirbhar base of manufacturing. And so I would expect that few more sectors get covered, some sectors which generate more employment and brings and allocates more resources to small and medium enterprises. For the MSME, if you slice and dice the MSME sector, the micro sector, which has about 99 or 90% of the share, they will be looking for uh, some kind of mechanism. I mean, government has not done anything to give handouts to them, but short of that, if the government can bring a scheme which is almost like the same as the emergency lending scheme brought in the month of July or August, a little more reform, little better, providing a better accessibility, so that these micro firms as well as the small firms can have, can access at least the working capital far better. Because my sense is that was, though the scheme did work in some places, but didn't work overall. And that is where the government will have to do, because that is the sector which will bring a lot more employment. Real estate sector has really suffered because the lockdowns meant that the workers are not available, or the migrant workers, which is also one of the mainstay of the real estate construction sector. They went back to villages. So we need to have something for the real estate sector also. And I will also be looking for that the big companies, or the companies which are large enough, should start moving on the capex spending. Government will also have to bring in the upgrade itself and have more absorptive capacity, because budget allocations is one thing, but if we are unable to spend that, then the benefit does not percolate down. So they will have to do that. They will have the jobs will also have to be created at the rural level. The government did announce something on the food processing sector, particularly into three areas: micro, macro, and the large. And I am expecting that there should be some mechanism at the farm gate level where the jobs get created, at least in the, because agriculture, which at the moment has done well, its productivity very surprisingly and quite thankfully has improved, and I would want that that productivity continues to climb up, so that agriculture becomes a viable part of the economy. And but at the same time, the jobs are created in the agro industry sector, particularly in the in food industry, food processing industry at the farm gate level, so that more jobs are. So I am looking for the employment as one big ticket. How do we have more such employment? Not through any particular scheme as such, but through the industrial correction and consolidation. I would also have my attention on how the government improves on the tax to GDP ratio. It has done fabulously well during this year, of course, based on a lower uh, base, and there is time for government to improve on the direct taxes, and move and use the opportunity to do certain corrections on the GST, because once you do the correction on GST, the prices, the cost of production also goes down to some extent. And that is something which will be dearly needed. The third one, which Gautam also pointed out, is the disinvestment. Disinvestment, barring 1 year in 2018-19, it has not done well actually. And most of the years, whatever was the target, the government has not been able to achieve that. The government will have to make a very must take sure-footed action on the disinvestment. There is a lot of goodwill with the Air India privatization, and we are looking for certain divestment on LIC or on BPCL, which Gautam also pointed out. But I would look for more such. Fourth item that I would really look for in connection with divestment, but that's a different one, is the asset monetization. And the government this year uh, aimed for 88,000, but their pipeline is far more. And the overall idea was that in the next 4 to 5 years, starting from the last year, they would have at least 4 or 6 lakh crores of asset monetization. And we know that there are a lot of assets which are on which the economic value we are unable to unlock. So it will be a good time to do that and work on that 6 pillars that the government announced last year during the budget, and continue on the correction and consolidation during the forthcoming year.
So you brought out a lot of points, Sanjay. Uh, various points which you touched on, and Gautam also brought that out. If you had to look at, uh, you know, how the government would, do you expect the government to spend a little more towards the pandemic, or will they, have to, put a very, very clear look at fiscal deficit and try and ensure that it doesn't go, ballooning upwards. The question goes to both the speakers. Gautam?
Okay.
Yeah, I think they will have to do the balancing act actually, Sal, given the way the global bond markets are poised and Indian bond yields are poised, because government is the largest borrower. So they can't take the eye off the pedal when it comes to interest rates. And interest rates obviously will react to the net borrowing numbers, which is a derivation of your budgeted fiscal deficit. So I think they will be very prudent, because if you go by the track record of this government for last 7 8 years, they've not gone berserk on spending, right? Of course, I'm not talking about FY21 because that is an unusual year of pandemic. If you look at FY22 also, on that high base, they kept the spending flat, the budgeted spending flat. So I do expect some rejigging of the overall items which are there in the spending list. So they will have to see where they can spend more, where they can, be little more, conservative and squeeze some expenditure on the non-productive side. If they can manage to bring revenue expenditure down a little bit and reallocate it towards the more productive side of the spend expenditure line item, which is capex, which is investments, then that will of course be welcomed by the markets. However, I must also point out, as I said at the beginning, that there are very little degrees of freedom which a finance minister has when you have 60-70% of your spending prefixed and non-discretionary in nature, and everyone wants the spending to be higher in rural, in agri, for manufacturing, for exports, for investments, and then also I am saying they should also revive consumption. So everything I don't think can be done, and therefore it will be a very tight balancing act for them, because they cannot let the fiscal deficit go berserk. Already we are seeing some repercussions of the tremors in the global bond markets ever since Fed pointed out that they are taking the punch ball away. They are going for zero taper in some point of time. They are going to increase the interest rates, whether it will be 3, 4, 5, we don't know, but the path is very clear. So the macroeconomic backdrop actually has changed versus the last year. Last year, the backdrop was ultra easy monetary policy, world flooding with liquidity. This year's backdrop is slightly different. The liquidity is, I'm not using the word drying, but I'm saying it is becoming more normalized. And interest rate environment has changed clearly. We have already seen last week several big banks have raised their deposit rates. So you have to be cognizant of that when you have expectations on the spending side. And then, of course, growth also has to be given a priority. One good thing which has happened actually, Salil, in the last 7 8 months is exports have revived after remaining stagnant for 7 years in that 280 $300 billion band. We are, I think, somewhere about 393 billion, right? And the plans are huge and ambitious. They're looking to double the exports number over the next 4 or 5 years. And of course, you're seeing several policy initiatives towards that through manufacturing incentives, PLI incentives, prioritization of investment and capex. So it's going to be a very tough and a tricky balancing act for the finance minister, which is basically stating the obvious. This is a cliche, and we all hear this thing every year. But that's how the reality is when you look at the P&L of the government.
Sanjay, same question.
Well, I know Gautam did point out to many of these areas, but let me take a very different route. Uh, what I'm thinking is that this is the year when the government brought 6.8% as the fiscal deficit. Probably the government can continue somewhere there with um, at least a medium term path on fiscal consolidation. Probably this is not the year when the government should go for fiscal consolidation right away, but there has to be a glide path. There cannot be a wanton expenditure. There has to be prioritizing of the expenditure. Good part is that the NPAs have come down, and thanks to IBC and similar such measures. So we are going to, the stage is set for more investment. But if the government tries to tighten the purse, then I think the correction and consolidation that I talked about, that would not happen. I'm still, and probably the in the president's address today, the government, the president mentioned about expenditure on health, and that is something which I'm really thinking, because the health and education, these are the two sectors which really gives a lot of jobs to people at every level and across the sections, and at a very low cost of investment. Because the stage is set, the private sector also comes, the public sector comes, and I would really look forward to a mechanism. Everything cannot be there in the budget, but a mechanism which develops and tries to bring health services through digital delivery, so that the cost is controlled, the benefits are to the last mile, and connecting the secondary and tertiary, the hospitals to the village level workers. That is something which I would be really looking forward, and the general expectation of the people will also be on the health sector. Government did bring the national education policy last year, and there will be time to uh, you know talk about that a little more, give a vision on that, more allocations, so that the education policy starts unraveling, and people get the benefit of this. And something of that on that was spoken by the honorable president also in the address today. The second thing,
Right.
that's one. The important will be that the while if the government continues to work on and improve on the supply side constraints, which have really been a reason for the inflation to be there in the country, I think we will bring certain kind of equilibrium. But at the same time, I'm also looking for, I do not want a glut, so there has to be some demand side equation also, and which is what we talked about in the first earlier. So uh, so if we continue to work on the supply side correction, and the demand starts generating, because the supply side also translates to demand side generation, I think we will have some better economy growth. And just to answer your question in one line, I would say that the fiscal consolidation can wait for one more year. In the meantime, let the government bring lot more consolidate correction and consolidation in this year, and from next year onwards. But nonetheless, during this year, they could go for a medium term fiscal consolidation plan, which could bring an idea of how we are going to move in the years to come, because ultimately we, as the FRBM says, we have to stay at 4.5%, which is what the number that they are looking at. So, uh, uh, but this is certainly not the year where the government should just tighten its purse.
Right. So the call is for one more year of you know not really trying to consolidate things at the moment. Uh, Gautam, back to you. You spoke about the thing of infra spending, the focus on various projects. Uh, could you guide us on what's really in the pipeline? What could we see in FY23? What are the big projects which need to be focused on?
Salil, honestly, every year there are a lot of projects which are outlined, right? Whether it pertains to rail, whether it pertains to roads, defense, and so on and so forth. So I think the government will continue with the hiked allocation for the broader three lines of infra, which is roads and highways, the railways, and defense has been slightly more flattish, I would say. Aside of that, if they are able to outline a broad agenda of which are the 10 big ticket infra projects that they want to prioritize, because we are all used to seeing a lot of schemes and announcements, Salil. For a change, I would like to see some announcements on execution and where do they want to prioritize, because this is a very important line item. This has a potential to revive private capex and also, basically encourage, with some lag effect, the broader consumption in the economy. And sorry for repeating it, but consumption is something which is really struggling at this point of time, and it requires help, right? Last 3 years budget speeches, if you hear, a lot of attention has already been paid to capex. So I think that will be a continuing agenda, and that's good. That augurs very well for the long-term economic growth of the economy, and we need that, right? Because there is clearly deficiency on multiple, infra subsegments. So that augurs quite well. But in the immediate here and now, you need some support for lower end of the consumption spending, and that is where, as I mentioned, that government will need to redistribute some of their spending line items so as to ensure that the bottom end of the pyramid doesn't fall off the cliff, right? Employment at that segment, in that segment, for the last 2.5 years has taken a lot of knock. I'll just give one data point, which is from the NHRAI, National Restaurant Association of India. And they've said that roughly 25 to 30% of the restaurants have closed down. And of course, all of this augurs very well for the listed big companies like Jubilant Foodworks and other QSR plays in the market. But this is not good from a point of view of the employment generation in the economy. Because one restaurant closing down basically means impact on multiple livelihoods. And then you also saw things getting a bit worsened during the second wave and third wave also. The 2022 hasn't begun well for a lot of this, mom and pop restaurants. So that is just one example. There are multiple such subsectors in the economy which are bearing the brunt of the COVID, and that is not getting highlighted because the big picture numbers at the index level for the stock markets, at the GDP growth level for the economy, they're all looking very rosy. But if you scratch the surface, there's a lot of pain which is hidden. And I think that is where you will need to prioritize your spending efforts and your policy initiatives. Infra, of course, being one element of that, capex another element, and consumption third. And of course, we all go back to the same point. How do you find the money for this? And the only way to find long-term money for this is, expedite your asset divestment plan. Clear all the pending items on the divestment. You already have a lot of list of assets which needs to be monetized. They need to be executed very well, and Air India would give a lot of confidence to investors, right? And you also have a very good capital markets environment right now in India, right? And it is when the iron is hot, you need to strike, and you need to strike very hard. Otherwise, this again becomes an academic discussion if the market is not conducive and supportive for your big ticket divestment agenda. So this is a very opportune time for the government to expedite some of those items which have been long pending.
What
Sahil, I think you're on mute. We can't hear you.
You can hear me now? Yeah. So,
Yeah.
so Gautam, realistically, they have spoken about this issue various times, and there are often grand plans and announcements of, government stake being sold in various companies, but they don't really materialize within that budgetary year. So, assuming also taking the, very optimistic case of LIC going through and BPCL possibly very quickly. What's next? What are the big ones on the agenda where they can actually improve their balances?
Salil, see, let's not jump the gun. It's not done till it is done. And we all know how many years Air India has taken. So let us see how LIC and BPCL progresses, because then once the elephant is out of the room, then rest of the small ticket items you can execute it fairly rapidly. And this is a big ticket item. 1 lakh crore of money being raised in capital markets is going to take a lot of doing, right? And it's a behemoth, right? Plus public sector IPOs. So till the time it is not done, I think it is not done, right? So even if it spills over by a month or two, it is fine, but it should happen, right? Because that brings a lot of vibrancy to the capital markets and the whole ecosystem of the economy, right? Because getting such big things done revise the investor confidence at a different level. You also saw what happened post Air India, right? This is done. Finally, it has been handed over to the Tatas. So one item off your bucket list, right? Similarly, we need to see some of these big ticket items out of the bucket list and into the realm of the reality, because the plan is already there. They have themselves specified which assets, which InvITs, which infrastructure projects, which stadiums, or which land parcels, which hotels they need to get rid of. Right? This government has been very clear. They've said that they have no business to be in the business. So the plan is there, the priority is there, strategy is in place. We just need to expedite the execution. And there is no better time than today for that execution, because you are having a very supportive and a conducive capital market. The overall corporate earnings environment is looking extremely strong in such a challenging overall macroeconomic backdrop. So if not now, then when?
Sanjay, I'll bring you in here. One of the other elements which often always gets spoken about, at least in the broader media and in the public eye, is always individual personal tax. Do you expect any rationalization or any further relief which might come in that space, in the personal taxation space?
Well, Salil, whether it comes or does not come, the before the budget, everybody expects that there has to be some rationalization. People would are expecting for standard deduction enhancement, and rightly also, because the at the moment it's at about 40,000. If it can move to by another 10,000, does not give a large amount of relief to the people, but certainly it gives a certain amount of comfort. Uh, the second one, which I'm really thinking, is that the capital gains, because capital gains, particularly the long-term capital gains, at the moment, particularly if you look at the debt on the bond and versus any of these long-term capital debt assets, you find that there are just two systems going. So there has to be a rationalization. There cannot be two systems going for the same sort of asset class, and that is very very important. So that rationalization will bring a lot of cheer to everyone. The second one
I'll
is
stop you
enhanced.
here, Sanjay. So you're saying that you'd want a kind of one regime rather than that old regime and a new regime. Is that correct?
No, 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 no. It's
No.
about the long-term capital gains.
Oh, you're talking about the
Uh,
long-term part of it. Okay.
Yeah, I'll come to the long old term, old regime versus new regime a little later. Uh, the second one is about the medical, under 80D section and 80D. Whatever it is, everybody had to spend during these COVID years some extra amount of money on their hospitalization, on medicines. It's time for them to be given some amount of relief through the budget. So that will definitely be one of the ask, and I hope the finance minister does something. The third one, which is uh, you know uh, uh, the fourth one, I should say, is about there has to be certain uh, the overall the savings that people can make either through provident fund or otherwise, or that also have to go up, because in this period most of the salary paid employees or individual employee, they had to take up some part of their provident fund to pay for the medical treatment, and in some cases maybe about 20 to 30% or 40 to 50% got wiped out. So it's time for that those savings to come back, and for that, if a tax measure is there, uh, it will make a difference. It will bring a lot more cheer. The fourth one is I'm talking about the interest on housing loan, because at the moment it's about 1.5 or 2 lakhs. Just give it a little bit extra so that it also allows people to go and buy more houses, and that will also boost the real sector. People are thinking, and I'm not really sure if that would also happen, that rate rationalization. Government has already brought a certain another measure, a full, a very different personal income tax. Of course, there are not many takers, but they would not want to tinker at this point with the old regime and do any kind of rate rationalization. So my sense is, uh, even if they don't do the rate rationalization, and if they do the other things, largely thinking from a people's perspective, it should it should help an individual. Now, someone may say that if you do that, there will be some tax outgo. The question is, what is going to be the quantum of that tax outgo? At the large number of people at the bottom of the tax payer, they do not they pay very little amount of tax. It's the top ones which really pay the large one, because it's in any economy, it is two inverted v that pays for the tax, and is the inverted v uh, is the pyramid, which is how the taxpayers are stacked. So the number, will not really impact on the tax collection, uh, and if at all it happens, it's only very little. So government could do that, which will bring lot more, lot more relief to the an individual. But certainly, the point that I made, that the bottom of the population, 20% have got their income wiped out. They are not part of this taxpayers net. So they are completely out of this thing. So some kind of relief to those taxpayers which are largely in the overall scheme, the middle income group, that is what it will happen, not at the top. It does not. So it's not such things are benefit to an individual, but certainly not reverse regressive, because the top people just may not bother about this 20,000 and 30,000 and 50,000 that I talked about.
A quick supplementary question here. Do you expect any kind of action on the relating to the crypto space? Any tax reforms? Any tax issues there?
Uh,
Do you expect it, or do you think they should wait?
I think there were certain, announcements which was very different from the earlier one. So you may see something, but I'm not really sure whether it will be a big one or it will be just be one of the initial, talking about, or a policy statement could also be that in the days to come we can do something like that.
Gautam, so I'll bring you in here. Uh, taking this a little forward now, beyond just a little beyond the budget, but we've seen some very impressive numbers, as you spoke about earlier, the Q3 FY22 numbers. Do you expect some kind of an upgrade of earnings going forward from now on?
Yeah,
How
Salil,
much?
so this quarter's result season has been fairly strong and resilient, In fact, half the result season got over. 25 Nifty companies have reported the numbers. And the growth is bang in line at about 18 to 20% profit growth. This is coming on a very high base. And we have seen a marginal upgrade, nothing much to write home about. But the fact that despite all the headwinds that we've seen in the last 6 months, input cost inflation, supply chain headwinds, then second wave, third wave related lockdowns. In the last 9 months since April, our earnings estimates for the next 2 years has not seen any damage. In fact, we have seen a 2-3% upgrade in the last 9 months. Going forward, I don't expect any material upgrades. In fact, I'll be happy if the current estimates are met because we have done 15% corporate earnings growth in FY21. On that, this year we are expecting about 35% growth. And then our projection for FY23 is 17%. So if these numbers are delivered, that itself will be pretty good. Of course, within the index, there could be churning. Some companies will see an upgrade, some companies will see downgrades. But at an aggregate level, I don't expect any material upgrades now because you still have a very severe input cost inflation cycle which is playing out. Sectorally, you've seen very good earnings coming in from financials, IT. They've done very well. And these are two big segments of the market. Between the two of them, they have about 55% of the weight of Nifty index. So the big sectors have performed very well. Some of the other sectors like cement, pharmaceuticals, consumer durables, they're bearing the brunt of high input cost and their earnings have gone over. They've in fact seen some downgrades as well. But because they are smaller ones and their index weight is not much, they're not going to make a big impact on the index level earnings. Net corporate earnings cycle has clearly revived in the last 2 years, and we expect this good corporate earnings to continue for a couple of years more because the big problem that we had of the banking asset quality that bottomed out in FY18, right? And since then, the banking has been a big contributor to the earnings growth, right? And then you had some heavy hitters like metals, which came into the picture last year after doing nothing for 4-5 years. And metals earnings have gone up 10x in the last 2 years, thanks to the very strong and buoyant underlying commodity prices, right? And they've also deleveraged. So you're seeing double impact on the positive side. Commodity prices have gone up, so your top line is improving and is bringing in operating leverage. And because you've deleveraged significantly in the last 2 years, you're also reducing your interest cost. Automatically, your bottom line is getting a benefit of multiple things which have happened in your P&L. So we've seen so far very strong performance, touch wood for that, and we expect this to continue, and which is why the recent correction doesn't unnerve us much. This is basically the market's way of adjusting to a slightly higher cost of capital environment globally. You're
This was
muted.
exactly my next question. That how do you see the current correction, particularly in view of the fact that you'll have a macro environment which will be a
Absolutely.
lot more dangerous, in terms of tightening of rates, you'll have liquidity squeeze. So you see it as a time-wise correction also?
So actually, we need that correction. To be honest, since March 20 COVID bottom, the market has doubled and has seen a relentless rally. Mid cap, small caps have seen even bigger rally, and we have not paused at all from March 20 to December 21. It's been a one-way ride, right? And typically we have seen in the past 20, 30 years of market cycles that market never goes up in a linear fashion. It's something comes which makes the markets correct. Right, this time around, it is Fed, geopolitical issue, higher crude prices, inflation, bond yield, interest rate, etc., etc. The point is, market needed a reason to correct, and it got that reason now. Right, that helps in two ways. It cools down things because some segment of the market was trading at stratospheric valuations which could not be justified by the underlying earnings, cash flows, and fundamentals. So it needed a pullback, and that has happened. Secondly, whenever market corrects, even the good stocks and companies which are delivering good earnings growth, they also correct. So that offers a window of opportunity for long-term investors to get in because the underlying cash flows and earnings growth and demand visibility is very robust. There's something like large cap financials, large cap IT companies, where the demand outlook is very, very strong. And their guidances are going up, right? And those stock prices have also corrected. So that offers a window of opportunity for people to get in. So I think this is a very welcome correction. Secondly, after 2-3 years of very strong performance, I am expecting a year of moderate to low returns, right? At an index level, of course, there could be stock specific, sector specific actions which could continue throughout the year. But at an index level, I am expecting a very moderate to low return kind of a year where the market digests the gains that it has made in the last 2 years and allows the earnings to catch up with the prices that we have seen. And that will be very healthy for long term compounding, because if our expectations of earnings growth for next 3 years are so robust, then of course, if the market remains where it is for next 6-9 months, it gives it a room to compound better over the next 3 years. And at the same time, these individual stocks, the stocks which are valued very expensively, they also get a window to allow their earnings to catch up with the existing stock prices. Otherwise the balance is missing on the price value equation. So from that point of view, I think this breather in the market was much desired and needed, and it's good that it is happening.
Sanjay, I'll bring you in here. Coming back to the budget, you had pointed out on that fact that a lot more needs to be done for small businesses. They've really borne the brunt over the last 2 years. What do you think needs to be done? Because we have seen the 2020 relief package which came their way, but obviously that's not enough. Do you have anything particular in mind which you think the government needs to address a lot more carefully for MSMEs and SMEs?
As I said, Salil, I was thinking of working capital access so that they can build their business back. It is very, and easy terms. Of course, I do not want the NPAs to come back because that had been a tough journey so far, and to come back to the same thing will be difficult. Then they could also be have some kind of uh, compliance relief from the GST, which is already there, but still they should have a chance to improve on that. That is the two things that comes to my mind. Apart from that, uh, more they should be given the technological help. That is, a technology fund should be created by which many of these MSMEs could access that, because at the moment their products have to move up in the quality, and if they continue to remain where they are, then obviously their demand, their product demand, etc., is likely to go down. So I'm really looking for a quality of product, because from these SMEs and the MSME sector, that if the government can bring that kind of thing, that the technology, and that will really mean a big support to the MSME sector.
So we have just under about less than 24 hours to go for the FM to announce the package. What would you say at a broader level? Do you add just one more question? But do you expect that the government might be a little more populist this year, looking at 5 state assembly elections coming up? To both the speakers, this goes whoever wants to go first.
Gautam, you want to? Oh,
I would
let
say
me do that. Okay, go ahead, Gautam.
no problem. No, sorry, I expect some minor, giveaways here and there, because you know the playbook, right? You've seen past state elections, you've seen budget, in the past also. I don't think this government has gone overboard to, make populist announcements ahead of any major state elections. So I don't think this time will be any different. Maybe some amount here or there, because it's not happened in the past. So I don't think, and also government doesn't have too much of room to splurge just for 3 or 4 states. So I don't think that is going to happen.
Yeah, Gautam, Salil, this is I personally feel that the government would want to play its cards well, not go overboard to reach out to these three, four states, because the people are quite discerning. They decide on the state as well as the central elections very, very differently. And uh, and if the government because it has certain its own strength, and if it works for them very well, very good, but they would rely on the good work that they have been doing over a period of time. So I also don't feel that there will be a too much of overboard. But if somebody reads that some of the points that I mentioned, and if it comes in the budget, that should not be read as give out by the government to some of the people in these states, because that will be available for all the country, of the entire nation. So I would
Right.
not really go on that.
Right.
Salil.
Gautam and Sanjay, thank you very much for joining in for this special session. Uh, we know that it's a tough, tightrope to walk for the government. Let's hope things start emerging on the, particularly on the infra spending part of it, and also more thrust towards disinvestment. You can't just keep having numbers which don't make sense. And thank you, viewers, for joining in. We also request you all to join in for a special coverage tomorrow on the budget itself, and log into ForbesIndia.com to get a deeper insight. Thank you once again, Gautam and Sanjay. Thank you. Cheers.